Okay, good afternoon, everyone, and thank you so much for joining us. We're just going to give everybody a few more seconds, and then we should be good to start. Okay, so welcome everyone, and hopefully you can see us and hear us wherever you are. A very warm welcome to Business Finance Week. This is the second year that we've been running Business Finance Week, and we had our pilot last year. It started as a gem of an idea, a seed of an idea, and it has absolutely grown since then. And actually now we are hosting these series of webinars and in-person events with over 60 partners across the whole of the UK. So today's event is one of 27. So we're going to have there are about 16 events which are going to be held across all the geographies across the UK, and then 11 of those events which are going to be webinars, which is what we've got today. So I'm delighted to be welcoming you to our event, which is Exploring Working Capital in Northern Ireland. And this forms part of our Thriving with Finance, Unlocking Your Working Capital series of events that we're going to be running. My name's Angelene Woodland, and I'm the Chief Customer Officer here at the British Business Bank. So for those of you who aren't as familiar with who we are or what we do, we were set up just around 9 years ago. We're coming up for our 10th anniversary next year. And we are the UK's national economic development bank. So although we are wholly government owned, we are independent and manage ourselves independently. So the entire mission of the bank, which is why we were set up all those years ago, was really to support smaller businesses across the breadth of the UK, and with an intense focus on how do we support businesses to actually access the finance that they need to survive, prosper and grow across the UK. And actually from a success perspective, recognising the success of those interventions that we've had over the past 9 years, as an outcome of the 2021 spending review, the government actually agreed to deliver £1.6 billion worth of funding out into the nations and regions across the UK. And actually that's by the creation of 6 new regional funds. And so that's really building on the success of 2 of those funds. So one of them being the Northern Powerhouse Investment Fund, which is local to me. I'm speaking to you from Manchester today. So that was MPIF, and also the success of MEIF, which was the Midlands Engine Investment Fund. And as a result of that additional 1.6 billion, actually the Northern Ireland Fund will be receiving £70 million worth of investment, which will be across both debt and equity. And we're really looking forward to having that launch coming up on the 16th of November. So look out for that. But for now, back to Business Finance Week. You know, it really is a great opportunity for us to gather businesses across the ecosystem, partners who we work with, to really understand how we can better support smaller businesses. And in terms of what businesses told us, so, you know, I said it started last year, was a pilot. The businesses who joined really said that they felt that they got a huge amount of additional advice that they didn't previously know about how to access funding, where to go, and how to really navigate what can sometimes feel like a really complex journey around how you find the right finance that is right for your business. 7 out of 10 of those who joined said that they actually managed to access finance and to find out more about it. And of those businesses who joined, we've been able to keep in touch with them since last year. And as a result of finding out more, finding out how to and where to go, those businesses have raised a combined total of £15 million worth of additional funding, which is really great to hear, and a success I hope that we'll be repeating this year. So we really want to build on the insights of the events from last year, and we want to really help businesses understand why managing working capital is really so important and how you can really use it to improve your business's overall financial health. And that's important because we know, we speak to smaller businesses all the time, that it's really been a challenging few years for smaller businesses with increased interest rates, energy costs, inflation. It's felt like it's been a barrage of, you know, different events hitting smaller businesses. And actually, our latest SME finance survey tells us that in 2022, of all the businesses who accessed finance, 53% of those told us that they accessed finance because actually they needed support with working capital. So it's clearly a really topical issue. That's a live one for businesses today. And so with these insights in mind and, really interesting data points, we're going to hear from a range of local experts who provide both support and working capital options to local businesses across Northern Ireland. So our event partner today is the FSB. So thank you so much for joining us today. And we're also joined by a range of other partners across the ecosystem who Susan will be introducing you to. And we're also going to hear from Brookfront. So Brookfront is a business who have actually used working capital, and we can actually hear a really live case study around how it's worked for them, how they've accessed it, and how it's really helped that financial health of their organisation. So we've got about 90 minutes together. I'd really encourage you to ask questions. We really want this to be as interactive as possible. There is a chat functionality, so please use it, and we will really try to get to as many of those questions as we can. And if we don't, we will also follow up and make sure that we get answers out to you. So thank you so much again for joining us today. We're really looking forward to spending this time with you, and I'll hand over to Susan McCain, who's going to be chairing the session. Thank you.
Good afternoon, everyone. I'm Susan McCain. I'm the Senior Manager here in Northern Ireland, and I'm part of the UK Network team, who are the boots on the ground across our regions and nations. As Angelene has highlighted, working capital finance can be just an invaluable tool for businesses of all sizes. The agenda for today, so during the next 1.5 hours, you'll have the opportunity to hear from our event partner, FSB, in Northern Ireland, and Chartered Accountants Ulster Society about their views on the local landscape. And this will then be followed by a panel session with 4 of our local providers of working capital solutions. That will then be followed by hearing from a local business, Brookfront, about their journey when it comes to accessing working capital. And during today's session, as Angelene has pointed out, we really encourage you to take the opportunity to ask questions. So if you're thinking it, no doubt someone else is too. So simply drop your question into the box and we'll endeavour to pick these up at the end of the session before Angelene concludes today's event. So, to help set the scene, I'm delighted to be joined by Roger Pollen, Head of FSB Northern Ireland, our event partner, and Paul Millar in his capacity as Chair of the Ulster Society of Chartered Accountants in Ireland, to help kickstart the session by setting the scene really from the perspectives of both the SMEs and accountants. So Paul, if you're able to join us too. Thanks so much. So, Roger, Angelene has touched on some of our own findings within BBB there that have highlighted that increased demand for working capital facilities and the need to help raise awareness of those finance options for local businesses. And recognising that FSB represents approximately 6,000 members in Northern Ireland, and your goal is ultimately to improve the business environment for smaller businesses by helping them to start up, grow and thrive. With that close connection with local SMEs, Roger, can I ask, what are you seeing and hearing on the ground from your members in relation to the challenges being faced and that demand for working capital support?
Oh, good starter question. Well, thanks very much for that. I suppose that the context is that more people are employed by small and medium businesses in Northern Ireland than by the entire public sector and all large businesses combined. So that's why it matters that we do as much as we can to support the sector. Within our membership, we tend to find that you have businesses joining us. It's a little bit like, I don't want to overmilk the analogy, but it's a bit like whenever you're a young driver, you start off driving, that's all you're interested in. But after a while, you realize that things can happen, you can break down, you need to have breakdown cover in place and so on like this. At that stage, people tend to join FSB, they invest in themselves and in their business. And I suppose that's the first stage, is realizing that you need to tool yourself up, to upskill, to have advisory services available and really understand your business. And at the moment we would have businesses that are probably, they've weathered a lot of storms, they understand the issues that they're facing, and it's a tough time for some of them and it's a very good time for others. So you never find that it's uniform across the membership. There are always people who are doing well and people who are doing less well. But quite often they're all facing common threats. And at the moment, I suppose the common threat is that money is tight, business is not easy. And therefore, in those circumstances, you need to look to your working capital, how to protect it, how to manage it, how to access more of it if you want to invest in your business and grow it.
Okay, and then Paul, turning to you from the perspective of local advisors, can you just explain, why is working capital so important?
I suppose I'm asking an accountant why working capital is important. I suppose kind of takes you back to your studying of that, as an accountant coming through. But really, it is the lifeblood of any business. I mean, I think businesses want to generate turnover, they want to generate profits, but ultimately, businesses do fail whenever they run out of cash, and that lifeblood of the business is absolutely key. So we do see certainly across our members who are advising customers that that the working capital cycle is absolutely critical for businesses, and sometimes the risk can be that finance professionals in some smaller businesses are spending more of their time micromanaging the cash than actually managing and helping the business move forward. So without adequate working capital and the funding for that, it can be really difficult to actually properly run businesses. We've seen sort of recent examples of that, even in our own portfolio here within White Rock, where a business landed a new contract, went off, stocked up, and then the rollout of that contract from basically their customer had slowed, so that caused real cash difficulties in the business. So having the appropriate working capital funding to match the cycle is very important, and we do see that generally businesses are growing, and with that growth, each year comes more and more increased working capital. And sometimes the difficulty can be that maybe the traditional lenders aren't increasing the working capital funding that goes along with the growth in the business. So sometimes you can get a bit of a disconnect there. So, but obviously, I suppose coming back to having that appropriate working capital structure is actually key for the business and for the business growth.
And when it comes to the value in business owners engaging with their local accountants, what difference can it make when it's done right?
I think from an advisor's perspective, we would certainly see that preparation of the business plans and funding applications, where there's an advisor involved, it does make a difference just in terms of that case going through, whether that's going through a bank credit approval process, whether it's going to alternative funder, whether it's going through any sort of form of finance. Having an advisor there to actually outline the case can be important, because sometimes businesses can be very close to their own business, maybe aren't articulating that correctly, putting it forward, and sometimes the language that the funders are looking for. So the advisor network is absolutely key in that, just in terms of the presentation of that information.
Okay, and Roger, if I can come back to you, are there particular trends or challenges, because I know that you spend a lot of time surveying members, are there any particular insights that you're seeing?
Well, yes, there are. I suppose one of them is around late payments. So we have a member, a chap called Justin McGorman, who runs a business called Reveal Business. And that's exactly what they do. They reveal what's going on in your business. So they would analyze out how a business is operating. So we spoke with him in advance of this just to understand what would he look for in terms of maximizing working capital in a business. And it's interesting how it overlaps with the sort of trends we're getting in our surveys. So things like chasing late payment, that's a big burden on businesses. It impacts on the available working capital. It's why FSB, you said at the top that we try to change government policy to make the working environment better for businesses, and where we can't do that, we try and put in place advisory and support services. So we do have a debt recovery business, a service that members can get free of charge, and it's just managing every aspect of the business. So again, talking with Justin, what he's looking at is the outstanding debt. When you get money in, putting it onto deposits, because there are good deposit rates to be had at the moment. Make use of it. Pay your bills on time, but don't pay them early. And procure at the right times as you use the time available to you to pay bills, to manage your cash flow. So all of these are things that come back to us through our surveys as to the pressures businesses are feeling and how they intend to or expect to respond to them themselves.
Okay. And Paul, are you seeing particular challenges, particular sectors or business types?
Yeah, I mean, I think what we're hearing, so just to give you a bit of a feel, the Institute of Chartered Accountants in Ireland has 33,000 members. We have 5,300 in Ulster, effectively in the Ulster Society. So that is a lot of touch points out into businesses, and so our members hear a lot about what's actually going on in businesses and the challenges that they're facing. I mean, a lot of the things that are coming across them, obviously the skills shortage is an issue, but I suppose there's an underlying confidence at the moment. There's a lot of macro events happening. Obviously, we've got wars around the world, but probably the biggest impact on which is the interest rate environment, and that is causing a bit of uncertainty across the board, because it's making, and I think we're seeing real examples of banks sort of tightening sort of lending policies, maybe particular sectors not being as focused on, but that can cause an issue in itself. And obviously, some people on the call here today from alternative funders, and that is helpful in terms of bridging those gaps at sometimes. But it is really important that we have a banking system that is responding in the environment to those customer needs. And I think just at the moment there is a bit of a concern just out there, just in terms of that availability of funding for businesses at a time when rates are obviously higher, so it's costing more, but just the availability of that credit is key. Just on the skills bit as well, I mean, it is hard to recruit, so that's causing wage inflation as well. So companies are struggling in that. I think our unemployment rate in Northern Ireland at the moment is the lowest it's ever been, at 2.2%. So the uncertainty again around Stormont isn't helpful. But I suppose there's a lot of great opportunities that we have. The businesses here are very, very resilient, and so I think what we're saying is there's an underlying sort of medium longer term confidence, but there's just probably a short term pinch point at the moment where businesses are just maybe are they postponing the next acquisition? Are they postponing investment in their business, in particular capex? There's just a little bit of an uneasy feeling at the moment, but that certainly doesn't go to the core, I think, of the overall confidence that is within the Northern Ireland businesses at the moment.
Okay, thanks, Paul. Roger, if I can come to you and ask if there was one particular takeaway or recommendation that you would give to businesses in the audience today, what would that be?
I think know your own business really well. Try and spend as much time working on your business as you do in your business. I think there's an awful lot to be improved in a lot of people's businesses if they can get the time to do it. And again, that it's an investment in yourself, it's an investment in your own business. So that if there was one takeaway, I think it'd be that. And then having done that, then you can make use of all of the services and support that other people on this webinar are going to be able to share with them. So I think focus on your business, work on it as much as work in it.
Okay, and in terms of helping raise awareness, like today's session, are there any other support organizations, or you and I had talked previously about there are so many doors to open, and it's just making sure that you find one of those doors to go through for that support?
I think that's the challenge is that for a long time FSB called for a one-stop shop effectively to assist small businesses, and I was at an event recently with the Department for Business and Trade, and they were talking about no wrong door. And I think that what they were recognizing is that businesses might look for assistance in exporting through themselves or Invest NI or their local council or various other organizations, and I think all those organizations have a responsibility to sort of do the wiring behind the scenes so that however a business approaches them, they are seamlessly directed to the right sort of support and the right area, rather than finding themselves caught up in a sort of never ceasing maze of notional support that's actually more complicated to navigate than its worth proves to be. So I think no wrong door is a good attitude, and then we all have a responsibility to step up and make sure it's properly connected behind the scenes.
Great, thank you. And Paul, just finally, I'll come to you with the same question. If there was one key piece of advice or recommendation, what would that be?
Well, I think along the theme today of working capital, I would say, look, working capital funding is available. It is out there. So I think traditionally, certainly if you were Belfast-based, people would have just gone around the square in town and got their funding from that source. It's more difficult now, but there's a huge range of funders that are out there available for different parts of your business, whether that's equity, whether that's debt, but it's not. It's not a mystery, but you've got to go and engage and go and have discussions. And I don't feel that I can't get funding for my business. You absolutely can. There's loads of various options out there, and I think it's having that, I suppose, open mind to actually go, engage with an advisor and go and actually find the funding that you need for your business.
Wonderful. Thank you both very much for supporting and joining today. Okay, so now let's turn our focus on to those types of working capital support that Paul has just mentioned on the ground here locally. So I'm very fortunate to be joined today by Judith Totten from Upstream, Gary Coburn from Simply Asset Finance, Liz McCrory from UK Export Finance, and Rona Barber from White Rock Finance. So if I can ask all four of you to turn on your cameras and join me. Okay. Just while Gary and Liz are joining on camera, I would like to ask each of you to just give an initial introduction into your organisation, just in case somebody in the audience isn't perhaps yet familiar, and if you can briefly explain how you're supporting local businesses on the ground with working capital support. So Judith, if you don't mind, I'll come to you first of all.
Sure, thank you very much, Susan, and thank you for the invitation today. My name is Judith Totten, and I'm the founder and MD of a business called Upstream Working Capital. And as the name suggests, we provide working capital solutions to business owners across the island of Ireland. The business has been around now for just over 12 years. So I like to disagree with Paul now and say that we're no longer alternative, we're now complementary, because I think after 12 years we might have earned our stripes. But we provide working capital solutions in the form of trade finance, stock finance, sales finance in the form of invoice discounting and factoring, as some of you might know it, and all kind of manner of working capital in between, purchase order finance, future sales, e-commerce, all that kind of stuff. And we look after businesses across many different sectors, small businesses up to corporates. And I'm sure we'll talk about that in a little bit more detail as we get into the discussion.
Okay, and Rona, if I can come to you.
Yes, no problem, Susan. Thanks for the invite again today as well. So I'm Rona Barber, and I'm an investment director here at White Rock Finance. So White Rock Finance has been around for over 10 years now. We established ourselves in the market very much in response to there being a lack of working capital solutions to local SMEs based here in Northern Ireland. So we are now in our third iteration of funds that we're managing here. So our loans it's a debt product that we have to offer here. It's typically providing term loans to local SMEs based in Northern Ireland to help them deliver their growth plans. So that is very much trying to provide them with funding to support those working capital needs to allow them to deliver the growth plans that they've set out to us. So since we've been in operation, we have provided loans to over 170 companies throughout all of Northern Ireland, from all various sizes, some at various stages of growth, some more early stage, through to very established companies. The purpose of those loans we're providing, it is to support the working capital needs. It might be to stock up for particular projects, to allow companies to staff up to deliver on contracts, to invest further in R&D and marketing spend, and various pieces of capital expenditure as well. Typically, the loans we're providing are provided on a term of 5 years, and I suppose that will form all part of our review when we look at applications.
Okay. Gary, if I can come to you.
Yeah, thanks, Susan. Good afternoon, everybody. Gary Coburn from Simply Asset Finance. I'm head of sales here in the Northern Ireland office. Simply is an SME lender that was set up in 2017. And we established the Northern Ireland office in early 2019. Since then, we have lent around £80 million into the local economy, mainly via our asset finance product, which is usually transacted through a hire purchase basis. We've been able to do this because we are supported by the British Business Bank. We are one of the availers of funds from the BBB.
Okay. And finally, Liz.
Thank you, Susan, for inviting me along to this event today. Delighted to be here. Liz McCrory from UK Export Finance. UK Export Finance is a government department. It's the UK's export credit agency, and we support export working capital for exporting businesses in Northern Ireland. We support all sectors, goods, services, intangible. We support SMEs and large corporates. Last year, we provided £6.5 billion in support of UK exports and supporting 55,000 jobs. Over the last 3 years in Northern Ireland, we have provided £1 billion in support of businesses here. We have great ambition to do more. We have a total capacity of 60 billion, 5 billion of that remaining as of June 2023. We help exporting businesses win contracts, fulfill orders and get paid. And we do that by providing guarantees to banks to support working capitals. Recently, we have onboarded a few non-bank financial institutions. So we're supporting them as well for the smaller businesses in Northern Ireland. So delighted to be with you today and discuss how we can help exporting businesses get working capital into the business. Very important, as Paul said, it's key these days, I think.
That's great. Thanks so much, Liz. Judith, I'm going to circle back to you now. So our SME finance survey that Angelene touched on earlier, it actually highlighted that SME awareness of invoice finance and asset-based lending significantly increased in 2022. So do you think that increased awareness also reflects an increase in demand for working capital facilities on the ground locally? And why do you think that might be?
Yeah, I would agree with that wholeheartedly. I have to say we probably had one of our busiest years last year. And I think that's a reflection of what Paul commented on earlier, that perhaps some of the more mainstream funders have kind of retrenched slightly and started to tighten down some of the credit policy, which is completely understandable when you look at the kind of macroeconomic challenges and headwinds that are there. So that's probably when the likes of the complementary funders like ourselves will come into play and look at things slightly differently. But reflecting out in the open market space, I do think, again, as I think will probably be said over and over again today, the scale of ambition in the Northern Ireland market is really encouraging. Despite the challenges and difficulties that have hit us in so many ways over the last few years, I think there are a number of businesses that are looking to expand, looking to export, as Liz will talk about, of course, looking perhaps in the M&A, the acquisition, the merger market, and looking to scale their businesses in that kind of way. So that obviously brings with it the need for additional finance in all its different guises. And as Paul also said, cash flow is the lifeblood of any business. So therefore, in order to scale, in order to acquire, in order to bring on new staff, in order to launch new products, whatever aspect you look at, there's a need for working capital. So I think we're finding the market buoyant. We're finding a lot of opportunity out there, and yes, on the periphery there are some challenges and difficulties, not least with the interest rate rises and still some of the supply chain issues that are out there. But the resilience of the local market continues year on year to, I'm not going to say surprise me, actually, it encourages me greatly, and it's really rewarding to work with people who still have that outward looking ambition.
Great. And are there any particular sectors or business types that suit the solutions that you offer best?
Really for us, because we're looking at business-to-business transactions, you're looking for businesses that are manufacturing, providing a service within the wholesale markets. So any business providing that kind of a business-to-business service or product or in that sector. What doesn't work for us very well, although we can structure around it at times, would be contractually natured sales where perhaps the business is entering into a long-term contract with maybe milestones on the way through. That's challenging because we're never quite sure where we are within that contract term or that contract phase, and there can be penal restrictions against that type of funding. But really a scalable business, a growth business, a business that is selling in either local or export markets. We kind of use the language in-house as a sell and forget business. So they're providing, as I say, a product, a service, and moving on to the next job is probably the cleanest thing for us to look at. But really a growth company, we will look at new starts, we will look at tech businesses, we will look at some of the more the kind of the newer sectors, if you like, but we look at each case in its own merit, but generally business to business sales would be our market space. Great.
And just finally, are there any key criteria that the businesses have to meet in order to avail of the solutions?
Yes, I mean, we don't look at the very small end, the micro end of the market, simply because of the cost involved of setting facilities up. So probably our sweet spot space would be a company wishing to borrow somewhere in excess of 150, maybe 200,000. We don't have any top line limitation on that. Ideally, a business, we will look at new starts, but it does need to be a business well structured with capital within the balance sheet. So, established business or business with some capital there. As I've said, ideally in the manufacturing, wholesale, distribution, service sectors. And we will, like probably any funder on this presentation today, look at the future of the business, the projections, cash flows, financial performance, if there has been some to date. We're probably less focused on looking in the rear view mirror and more looking at the future and what can be achieved and what can be attained in the future, and with access to appropriate capital, what the business can do. But really, aside from that, we're very much more into relationship building and kind of getting to know the business to see if we can structure a facility around the needs of the business rather than trying to kind of pigeonhole, if you like, a business owner into a particular sector or a particular credit policy.
Great, thank you. Rona, if I come to you, I'd mentioned earlier on about the SME finance survey. It's actually also highlighted that a higher proportion of SMEs are considering having more than one finance provider this year. So I just want to understand, how do you work alongside other funders?
Yeah, so we typically see where we're getting involved in companies where there generally is another provider in there. So we would see ourselves as very much complementary to those funders. In a lot of cases, we would actually get a lot of our referrals from the mainstream banks. And often this will happen where, you've got a company that's been with their bank for a long time and the bank has continued to support them, but perhaps, with a new project that needs further funding, the risk or the appetite from within that bank might be limited, I suppose, to some extent, where maybe the bank feel that they can fund an element of that, but there still remains a bit of a gap. So typically what we'll find is the bank might refer that SME onto us, or we speak to that SME where we then, I suppose, will slot in with that gap funding where we fill that additional piece of funding that's needed to close out the funding that's needed to deliver on that project and that growth. So we would see, as I say, a lot of those opportunities, and on that basis, we're working constantly with those mainstream banks with alternative providers such as, Simply Finance and the likes of Judith at Upstream, where, it's acknowledged, that Judith's security will be the debtor book. So I suppose it's then where we slot in around that. So we would see ourselves working very much alongside those funders and taking a commercial and a pragmatic view on how we can work together. Back to what, again, Judith said, we do see ourselves now starting to become more mainstream as the 10 years have gone past. So times have changed and people are now more comfortable with that cocktail of funding within their business. And I suppose all funders are getting more comfortable working with each other as well, and knowing where each other's limitations might sit.
Okay. And are there any particular types of businesses that you support?
Okay, so again, we're pretty sector agnostic, and again, we will look at businesses at various stages. So back to what I said, we will look at companies at the early stage through to very established businesses. Perhaps, some of those early stage businesses might just not be ready for mainstream banks. So we will look at those. So we will be buying in very much to the projections that they are presenting to us and understanding the key drivers behind those. Where I suppose sometimes for banks that might be more difficult, where maybe they're looking back and looking at track record and needing to have that box ticked. We very much look at the here and now in terms of that forecast position and how that will look. Often we find ourselves then working with equity providers sometimes in that earlier space where maybe there's been significant equity raised, and for that particular owner or business, whenever there's equity taken on, it's just always trying to manage that piece around dilution. So sometimes our funding can come into those types of business to help manage, I suppose, that dynamic within that shareholder base. And again, in terms of, we are still, as I say, funding those more established businesses that are continuing on that growth journey. In terms of sectors, it is a whole breadth. So it is your manufacturing businesses. It will be your IT businesses. It will be those businesses sometimes where maybe they don't have as much tangible security to sometimes pledge, which again might be a more difficult space for banks to fund if there isn't that tangible security. So we'll often find ourselves working with those types of business to help support their R&D needs, their marketing needs. But we work with businesses that are maybe manufacturing consumer products, industrial products. The whole spread is quite broad, which again makes the job, I suppose, that bit more interesting in that it's quite broad.
Great, thank you. Gary, I'm going to ask the same question of you. Are there any particular sectors or types of businesses that your solutions work best for?
Yes, Susan. So we're a specialist lender, and really the main sectors that we operate in are haulage, followed by construction, followed by engineering and manufacturing. And we have specialists within our own business that understand the types of assets that those particular businesses buy. May that be a used lorry or a refrigerated trailer that you'll see transporting your food around the country. You have your yellow plant that you'll see on construction sites. And then in Northern Ireland, the engineering sector is very buoyant and very active, and you have a lot of businesses in manufacturing as well. And we really understand the assets that those particular businesses buy, and we are then able to determine what the residual values are on those assets. Whereas you'll find that the traditional banks that are here, they won't know what a plasma cutter is, or a particular type of engineering machinery, guillotines and those kinds of things. And if a customer goes to them with an inquiry for that type of machine, that the bank won't understand what they're actually buying. Whereas we actually have relationships with the suppliers of these machines, so we have a really good depth of understanding of what these businesses actually need to buy, and then that enables us to easily advance funds on those types of machinery. And the really good thing about a lot of that stuff that we lend on, because we understand it, we understand the second-hand value again. And that then opens up further opportunities for businesses once they've bought something and maybe owned it possibly for a few years, for other options on working capital.
Great. And are you able to give kind of a flavour or any examples of facilities that you've provided locally and what that has enabled them to achieve?
Yeah, absolutely. So I'll talk about a case that we transacted in October, really within a matter of weeks, for a facility of around £400,000. We had a local construction business that has acquired significant contracts and had a need for additional working capital to meet those contracts that were beginning to break ground on. So we were able to refinance existing yellow plant that they had owned for a few years that had equity within it. And within October, we were able to arrange that facility from first inquiry to pay out there at the end of October, and that was a facility of £400,000. That is a release of capital into their business, in that we just paid the funds into their bank account, and they are then free to use that working capital as they please.
Okay, great. And is there anything particular that you expect to see from a business or for you to be provided with to help with that application process?
Yeah, we like to see that a business is well administered and has the ability to meet the repayments that they're asking us to advance to them, and also that they have a good sound rationale as to why they want to borrow the funds. So we really like to see their accounts, their bank statements, any management information that they have. What we're seeking to do is establish repayment ability. If that information is historic and they've been awarded some good contracts that their historic information isn't going to reflect, well then, as Paul was saying earlier there, if you get an advisor to provide projections and forecasts and provide us with a solid rationale as to why we should provide an advance for the business, that's what gives us confidence.
Great, thank you. And Liz, if I come to you now, again, are there any key criteria that businesses have to meet in order for them to receive assistance from UK Export Finance?
Well, yes, Susan, there are. We as a government department and, as an export credit agency, we support exporting businesses. So a business of any size, we can support businesses of all sizes, and I said all sectors. But at any one of the last 3 financial years, an exporter must show at least 20% of their annual turnover has been in export sales, or in each of the last 3 financial years, at least 5% of their annual turnover must be in export sales. So 20% export in one of the last 3 years, or 5% export in each of the last 3 years. And that's not very hard to get to, when you're sitting in Northern Ireland and we have our nearest neighbour, the Republic of Ireland. So it really isn't hard to get to at all. So that is our key criteria. You must be an exporting business. But if you get our support in terms of our new general export facility, which has been an absolute game changer for UK Export Finance, allowing us to help so many more businesses. It's phenomenal. Banks are our main referral partners, as well as, Invest Northern Ireland and the Department of Business and Trade and so on. But under the General Export Facility, we can support any size of a business. So what I would say is, please come to us and don't think that the UK's Export Credit Agency only support the bigger business. This has been our best financial year to date.
Great. Just on that point, are you able to give us maybe 1 or 2 examples of successful export finance transactions that you've supported, and how that's benefited those businesses working capital?
Well, yes, I can, and I'll give you a couple of examples. And of course, we have received authority from these businesses to use them as an exemplar. So recently, a Limavady company called ELSS Engineering, they had developed engineering equipment for large aquatic firms overseas. So they recently won a contract in Singapore. So they came to us. The contract was worth over $5 million US. They needed working capital to be able to raise bonds and also buy the goods that they needed to deliver the project. So they came to us through their bank, which was HSBC, and we were able to back a £2.5 million loan for them to actually deliver this project. So you say, what does that mean for the company? Well, simply they couldn't have undertaken this job without our help. They couldn't have done it without our guarantee. The bank hadn't sufficient risk appetite to fully support them, and that's where we came in. So absolutely delighted to do that for this company who is growing massively over the last couple of years. This is the second time we have been able to support their business. We've also, I wanted to talk about the smaller businesses, businesses who don't have the big turnover, where banks really aren't interested in supporting their working capital requirements. We've partnered up with a company called Newable. Now, Newable deliver loans up to 300,000 for us, short-term loans, 1 month, 3 months, up to 12 months, very quick and easy loans to get, backed by UK Export Finance 80%. So we were approached again by a Northern Ireland company, Copeland Spirits, and they had hit a real speed bump and they really needed some cash to be able to take on overseas contracts. So they came to me, I referred them to Newable, and Newable were able to get the money out to them within a couple of weeks, and that just really helped catapult their business growth and their journey exporting overseas.
Great, thanks, Liz. Okay, I'm going to come back around again. I want to ask each of you if there was one key message or recommendation, just as I did with Roger and Paul before, one key takeaway message for businesses to leave with today. Judith, can I ask what yours would be?
Yeah, I think I always say to clients and anyone I'm chatting to or mentoring that never be afraid to ask the stupid question, because there is no such thing as a stupid question. So go out, research, ask questions, and then you can make an informed decision as to what is best for your business. And collaboration is such, I know it's a tired and overused word, but I think collaboration is working for everyone so well now. I mean, when I started back in banking, I'm not going to say how many years ago now, but a lot of years ago, it was very much you went to one bank or another bank or another bank. You didn't mix and match your funders and your solutions. Nowadays, collaboration is very much acceptable, as Rona has said, Liz has said, everyone said, we all work together very well. We share security and we make sure we deliver the right facility, product, service, whatever to the customer. So, sorry, that was a long-winded answer to say, ask the questions and do some really intelligent research before you make your final decision. Great,
thank you. And Rona?
Okay, I suppose there's a few things. I would say start the conversation early. From our perspective, the earlier we're talking to businesses, to build that relationship piece with them, it's very useful. Coming to someone at the 11th hour needing funding in a bit of a panic is not an ideal scenario. So start that conversation early, but also come prepared in that know the drivers behind that business and what is going to deliver those projections that you're preparing, because again, that will give any funder confidence and belief in you as that management team that you can deliver on that. I suppose ultimately from our perspective, whilst we're backing businesses, we're backing the management team within those businesses. So it's having confidence on what it is that you're presenting and knowing that that is deliverable.
Great. Gary?
Yeah, I would say don't be afraid to get in contact with us. We have a team of local area sales managers that will come to you in your business. We'll sit down with you at your business and take the time to get to know what your requirements are. Whereas opposing that, I would say that if you contact some of the other mainstream banks, they would probably be seeking for you to make an appointment and go and see them. So yeah, we can have an informal discussion with anybody who has an inquiry there, and would certainly see if there's something that we can do for you.
Brilliant, thank you. And finally, Liz.
Well, I would say if you're an exporting business of any size and need working capital to grow your business, please contact me. My details are on the UKEF website, because I am really confident that there are solutions in the private sector and from government, to help you grow your business and succeed.
Wonderful. Thank you so much, Liz, and thank you to all four of you. We'll hopefully get some questions in the box, and we'll come back to you after our next session. So thank you. Okay. So just before we come to those question and answers, I'd now like to welcome Declan Gormley, Managing Director of Brookvent. Declan, again, thank you so much. If you can help give us a bit of an introduction into Brookvent and your journey so far.
Yes, good afternoon, Susan. Delighted to join this discussion. Brookvent are a manufacturing business. It's been around for a long time, 40 years next year. And in that old footballing cliche, it's been a business of two halves. From when it started for the first 21 years before it was sold in a management buyout, it enjoyed significant success, growth on growth every year, strong profits. It was sold in a management buy-in in 2005. And of course, the timing couldn't have been worse. And it was a deal of its time, fairly heavily leveraged. By the time we get to the end of 2008, which is when I came aboard here, the business was on the brink of administration. Turnover had more than halved, profits had evaporated, huge cash flow issues, et cetera, et cetera, et cetera. So the second half of this business has been a journey of trying to move from that position, develop a completely new strategy. I suppose the other bit of learning which you get in business schools is, it's always a good idea not to have one product sector in one market, which was the problem, because when both went south during the financial crisis, that really was what crushed the business. So to develop a new strategy and grow and move into both different products and different markets was really the strategy. The challenge, of course, was how to fund it. And that's where the model that came along with White Rock in 2012 was an absolute lifesaver for Brookvent.
Great. And when it came to trying to understand what working capital solutions you needed, how did you figure that out? And how did you identify those funding partners?
Well, I think truthfully about the funding partner was I heard it on the radio, the announcement that White Rock had been formed, and that was the first time that it had been mentioned. So that became something on the radar. In terms of what we needed, I think, and other speakers have alluded to today, you have to have some idea of where you're going. You have to have some idea of what you believe can be achieved. Then you have to actually spend the time in putting that together in a cohesive and a coherent plan. And you do need to back it up with the financials based on whatever assumptions that you're making. And obviously, you're making assumptions that you believe to be true. And then take those to whoever you want to try and raise the capital from. And the job, I think, of any business is to present coherent, cohesive information, but also present it in a way and with a confidence, and demonstrate to the people that you're asking to lend you money that this isn't just you're doing this on a whim, that you actually have confidence in your own plan, you actually believe in your own plan, and more importantly, that you're determined to deliver in that plan. I always look at it this way: if somebody came and asked me for money and didn't demonstrate any of those things, I doubt if I'd want to lend to them. So I think there's a mix of things that matter when you want to raise money. It's not just numbers on a piece of paper.
And how have you found the Judith mentioned there about that collaboration and that, that sense of working together. How have you found that when you're looking beyond your mainstream bank and you're looking at other providers?
Well, I suppose that people will think I'm on here as a cheerleader for White Rock and Upstream because Brookvent are the meat in that sandwich. But the truth of the matter is, without those two sort of elements, term loans from White Rock and invoice discounting from Upstream, we would not have been able to get to where we are today. I mean, I think everybody recognizing the world changed post 2008. The banks are much more risk averse, and therefore the introduction of a model which is a hybrid, that combination of maybe mainstream banking plus alternative lenders, is here to stay, in my view, because I think that is a mix that companies need to look at. The days of just having one provider, as people have already said, are over. And we need to be able to access other finance. And companies like White Rock, companies like Upstream are good examples of those alternative providers.
And the likes of that Upstream and White Rock support, what did that actually help you to achieve?
It really, the first loan I got from White Rock was in 2012, and that was at the point where the business was limping along after they trying to survive, first of all, in that period from 2008 forward was a matter of trying to generate revenues. If you did have a plan, then you had to generate some surplus revenue and then use that to try to fulfill a bit of whatever you were trying to do. It's not a model that I'd recommend to anyone. What changed in 2012 was the capital came in from White Rock, and we had three uses for it. One, to develop export markets. Secondly, to develop new products to move us into different sectors. And then the third was working capital. Those three things combined at that moment were the catalyst for the growth. We've had year-on-year growth since 2013. If we'd have carried on as we were, I don't think we would have been much different in 2014, 15, 16, really, because it's extremely difficult to run a business without cash.
And how important was it to have those early conversations with providers?
Oh, it is vitally important, and I think maybe Rona alluded to it. I think you need to speak early, and you need to go with a clear view of what it is you are doing. My advice to anyone is, whether it's mainstream banks or any of your providers, you've got to be truthful. There's no point in trying to put a gloss on something that isn't going well. You're much better to say, this is how it is right now. This is how I think it's going to be. And in the case of those early discussions about where you're maybe starting the conversation, you do have to, I think, put the work in to have a case to present that is something that people can believe in, and then also be able to demonstrate that the assumptions you're relying on are not just sort of numbers you've plucked out of the air. There is a logic and a rationale to them, and be able to demonstrate why you think that will take you to where you want to get to. And at all times, you're trying to add credibility to whatever you're presenting.
And looking back over your journey and then looking ahead, is there anything that you can recommend or share a pearl of wisdom to businesses who are perhaps on today's webinar in terms of what they should do when they're looking for working capital support?
Well, I don't know if it's a pearl of wisdom, but I do think what you have to recognize is that you need it. Sometimes people wait too long and it's too late. I think what you have to be able to do is to have I think Roger said earlier, spend time understanding your business, what the pressure points are, what are the likely issues that are arising. And if you anticipate there is going to be a requirement, then get in early and have that discussion and set out why it's required, and then be able to also demonstrate. I think Gary mentioned there that you're going to have the capacity, or your business is, to be able to repay any monies that you are borrowing. So, you know, it's not there's nothing unique in the point, and you just need to be practical, and you need to be realistic, and you need to be willing to recognize, you know, nobody likes to say my business isn't doing well. That's a common sort of feature. But the truth is, if it's not doing well, then you'd better say so, and then set about the task of demonstrating why getting cash in at that particular moment is going to be the difference that will allow your business to be here in next year, 5 years' time. And I mean, a lot of the story of Brookfend has been about being able to recognize that we're not going to get to the next stage unless we actually address the issues of the shortfall that we need either in working capital or we need in a term loan. You know, we just did a small acquisition there lately, which we weren't able to fund ourselves, but White Rock filled the gap. Now, the benefit of, I think, White Rock in that sense is, you know, we've been working with them now since day one, 2012. So, you know, 11 years later, hopefully we've demonstrated our ability to be able to present information and for that information to be valid and trustworthy. And that allows you sometimes, and we did have to do this very quickly, to be able to raise the capital required. If I had been starting that conversation from cold, I doubt if we could have done it in the time frame. So there are those elements of having people who are commercial, and there's flexibility, and you have taken time to develop a relationship so that at least they know who they're dealing with, and that they can, you know, validate for sure, trust and verify, but at least they can rely on what you're telling them.
Wonderful. Thank you so much. Judith or Rona, just giving you an opportunity here in case there's anything that you want to add, because you've been such an important part of the journey with Brookfend. Do you have anything to add?
Okay, I think from our perspective, I mean, as Declan has alluded to, we've been on the journey since 2012. Again, from our perspective, it isn't just, it's not just one loan and then we go and forget about you. It is, you know, Declan, I think maybe we've had 4 loans through our journey. So I suppose it's that piece of, you know, as any new projects come along, you know, we will work together around seeing whether that's a fundable opportunity from our perspective. I think, Declan, what you've also done there is, I mean, obviously you recognize within your business, you know, you've developed out new products and you've gone into new markets as well. So I suppose it's recognizing that you've pivoted in that sense as well. And I suppose it's making sure that the funding that's needed to deliver that geographical spread is there. And I suppose to that end, we've been able to help some of that in terms of funding outside, you know, just some of those contracts that were Northern Ireland.
Yeah. I mean, that's an important part, I suppose. Brookfend 2010 was 100% UK. Today, we're probably closer to 60% export and the balance in the UK. So there has been a significant shift in our market presence.
Judith, are you perhaps Judith on mute? Sorry. No,
you've got me now. Sorry, go ahead. Sorry, Susan.
Thanks. No, Judith, it was just to say, as I said, because you've been such an important part of the journey for Brookfend, just in case you had anything to add.
Yeah, I mean, it has been as Declan said, a journey, but actually the business has gone from strength to strength, and we started at a time when probably with Declan when the banks were going through some change again, and Declan came across to us, and I think probably we were able to work together and give him a bit more flexibility, a bit more growth capital, and we were comfortable to look at the export sales, and the structure of the business may not have worked for some of the funders, but worked for us, and it has been a warm relationship, and as Declan alluded to several times there when he was speaking, built on trust. I mean, if you know, trust and honesty and integrity, all of those really boring and old-fashioned things, but actually they work, and relationship means actually a lot more than pieces of paper sometimes. So it's the same as the building relationship with White Rock. We've worked together and hopefully we'll continue to do so.
Wonderful. Thank you so much. And thank you, Jacqueline. We really do appreciate you taking the time to join us today and giving us that invaluable insight into how you've continued to grow that Brookfint business with the various working capital solutions.
Okay.
So that leads us on to our question and answer session. We have some questions coming through, and if I can encourage everybody, now that you've listened to all the various speakers, if there's anything that you remain unsure about, as I say, if you're thinking it, I'm sure somebody else is also wondering about it too. So please do put through your questions into the chat box and we'll run through some of those now. So the first question that I have through is, what are the warning signs of overtrading that businesses should look out for? Could I perhaps turn to maybe Rona or Judith to help with that?
Yep, certainly I'll jump in first while Rona's getting ready. I mean, for us, overtrading in the working capital side of things, we will see signs very quickly that obviously creditors are starting to push out because the business doesn't have the working capital to service the creditors. The Crown position with that PAYE could be pushing out, and the sales are not keeping up with the generation of cash against the sales, are not keeping up with that need. Debt turn could be moving out because the customers are not collecting their money in fast enough, which obviously generates the cash availability to service. So that's where we would tend to often we will step into a relationship at that point in time where the business is trading. I'm not sure, do you call it overtrading, or do you say it's expanding rapidly and the cash flow is not keeping up with the needs of the growth in the business? So we step in and help to fund the creditor payments, the purchase of stock, funding the sales invoice side. So you're kind of maybe even helping with the credit control to try and shorten that credit cycle. So you're starting to try and match the cash within the business to the cash going out of the business. So there are a number of signs, and often actually the single biggest sign, not wishing to be flippant, is the stress etched on the face of the finance director the first time you meet him or her. So, but there are solutions to get through that.
Okay, I don't really have much to add to that, really. I suppose it is just that point of typically seeing the creditors pushed out and, you know, typically not picking up and answering the phone if called. You know, again, as Judith says, that will be down to the pressures, you know, of managing that constant bombardment of, you know, how are we paying for things. So I suppose it is that piece, those are the warning signs, and I suppose it's trying to put your hand up early whenever you see those issues maybe within your business, because the sooner, you know, it's identified, it's easier to manage, both from, you know, obviously from all of your creditors, you know, chatting to them and trying to get onto payment plans with them. Again, chatting with HMRC as well and getting payment plans and keeping them in the loop, you know, is very important. So I suppose it's, if that is the case, it's just making sure you take action as quick as you can on that.
Great, thank you. We have another question in, Gary. I'm going to come to you. Is asset finance typically subject to fixed or variable interest rates?
Very vast majority of it, Susan, is transacted on fixed rates. Variable rate hire purchase is available. It is out there, but it would be few and far between lenders who actually provide it. Yes, fixed rate would be the 99.9% of all the agreements that I would see being written across all the lenders that are out there, not just ourselves. That's obviously been impacted very recently as well, because we've had the 14 rate raises since early 2022. So there's been a big increase in cost for businesses as well in relation to that.
Okay, Gary, I'm actually going to stay with you. There's another question about common mistakes. Are there any common mistakes that you see when people come to you looking for support?
So back to my point of us liking to see that businesses are well administered. So whenever we are carrying through a proposal or an application for a customer, we obtain their bank statements from them, and we look at the bank statements to see how well administered are they, and are they meeting all their commitments within their bank accounts. And even if it's the smallest item, if it was for a direct debit for a very, very small amount and it's not being met on a monthly basis, that then shows in the bank accounts. And that then really would affect our confidence in lending that customer money, because the underwriters that will look at this and go, okay, well then if this customer doesn't have the means to meet the small direct debit or isn't taking care of these affairs, these small affairs, well then who's to say that they wouldn't honour their commitments with us? What we do see quite a bit of recently with the various loan schemes that were in place during COVID is that a lot of businesses took bounce back loans and those types of things. And we want to see that those are well administered as well, and everybody is repaying their commitments as they had agreed to.
Great. My next question, I'm going to come to Liz. So Liz, with UK Export Finance, do I go directly to UK Export Finance, or do I need to refer to my bank and have them on board first?
Well, either or. A lot of my referrals come directly from the bank, and like the other speakers have said, Judith and Paul and Rona there, you know, when the bank has reached their appetite in terms of lending to customers, they will come to us and they will say, look, you know, we would like to take on your guarantee. We have now actually delegated authority to the UK's top 5 banks, £10 million and up to 5 years. So the bank won't even come near us with a referral from a client if it falls within their parameters and they have the appetite to do so. But I am absolutely happy that exporting businesses come directly to me. And they sometimes will say, look, the bank has absolutely no appetite to support. And that's where I think about our referral partners, you know, Invest Northern Ireland, Judith at Upstream, you know, what else is there in the marketplace? Also looking at, you know, some of our non-bank financial institutions that we've brought along. So I would really welcome, if anyone wants to know how to access UK Export Finance support, come to me directly and I will work it through with you. And, you know, we really want to do so much more in Northern Ireland. And, you know, we're actively looking at non-bank financial institutions to onboard so they can use government's guarantees to lend to businesses in Northern Ireland as well.
Great, thanks Liz. Okay, another question through. In addition to taking on finance to provide working capital, can any of the speakers share any tips for managing working capital internally, whether that be managing stock, debtors or creditors? I'll open that up to see who would.
Well, from my perspective, I suppose it's making sure that, I suppose whenever you're looking at whatever jobs are coming or need to be delivered, I suppose it's making sure that you're not, you know, overstocking unnecessarily for those, and that you're not tying up too much of your funds, you know, in stock. And I suppose whenever looking at those contracts or those customers, making sure that, you know, payment terms are agreed with those individuals and you're keeping those as tight as you can in terms of getting those paid within the agreed terms, that they're not stretching out, you know, beyond the 60 days, 90 days or whatever, you know. And I suppose from your end, Judith, I suppose that's, you know, making sure that, you know, that works with their ID facilities that are in place.
Absolutely, I would echo that completely. I mean, if you're sitting as an FD within a business and you've got pressure from the creditor on that side, and you're not collecting your cash in on the sales side, I've often said to people in that position, you're basically running a gift company, because you're providing services and you're not collecting your money in, and that means then you're not able to pay your suppliers. So you're gifting your services. So you've got to manage and juggle on both sides of that equation. I think sometimes people get very focused on one side or the other, but you've got to balance the two, and then apportion the cash out appropriately, and look, as we probably have all said in different ways, look for the solutions to help you either elongate or shorten that cash flow cycle, whatever works best for you.
Great, thank you. Things happen so quickly in small business that might require a swift movement on funding. How quickly can things be turned around for them?
I'm happy to jump in if you like. I mean, and if the team were listening to me, they'd probably shoot me right now. But we've been known to turn deals around in less than a week. It's not ideal, because there's a lot of work to be done in putting a new piece of finance in place, not least the security, working with the lawyers, putting a credit proposal together. So there's a lot of intense work involved in delivering and drawing down, but it can be done. But I think, as we've all said, probably time without number on this particular presentation, looking to your needs early and trying to kind of anticipate your needs and project your needs is by far a more comfortable and stress-free methodology. But it can be turned quickly, but it's not ideal.
Can I just pick up on that one as well? I think Judith's point's very well made. There's an old saying that a banker is somebody who lends you their umbrella when it's sunny and wants it back when it's raining. And joking apart, I suppose we've got to look at actually the sort of the natural impacts that can happen, and we're seeing it across Downpatrick and Newry and Portadown at the moment. So businesses that were perfectly good businesses a fortnight ago are suddenly facing existential threat, and I think that's where the value of relationships really comes in, is where there's a good relationship between the business and all of the various lenders that they have in whatever form that happens. And I think we just need to make sure that whilst understanding your need to protect your capital and your customers' capital, your lenders' capital, is also to try and make sure that those relationships last in the longer term. So as we help those businesses to have the space and the time and the resource to get back to being the good businesses they were before some event that was outside of their control impacted them. I suppose to that effect, we have I said earlier about FSB stepping in with services. So we do have a funding platform, and what that is intended to do is for members to go on, put in their criteria, and very quickly understand or be assessed for a sort of unique panel of trusted lenders. So that it's a good way of letting them see what's immediately out there in the circumstances they find themselves. But I think Judith's fast response to situations is exactly what you want to see, where circumstances change quickly, is for your lenders to be responsive.
If I could just add to that there, Susan, in the asset finance and the product that Simply has is very, very swift to arrange, and you're talking days and weeks rather than months. Just to add to what Roger said there regarding the issues that some businesses have experienced over recent weeks there, I would be saying, go to your lender and speak to them. I had a call from a customer there this morning whose business has really been put on hold for a month or two because they've been affected by the flooding and they can't operate their contract.
Great. Okay.
Susan, I was going to add to that as well. Having delegated authority to the banks, it means that they can automatically draw down a UKIF guarantee to collateralize a loan. So it's almost immediate. I guess the thing is, as soon as the bank decide, look, we want to do this, but we don't have sufficient collateral, well then they can use us to back a deal, and that's automatic. So we have got better at and quicker as well.
Thanks, Liz. So one for Judith. So what are the advantages of an invoice finance facility over a standard bank overdraft?
I get asked this question all the time, and it is actually, there's lots of advantages, but the key one is an invoice finance facility is predicated upon sales that you can generate in your business. and not necessarily the tangible security that you could present to the lender. So if you think about a normal trading business who might be operating out of rented premises, so they don't have a property, they may have limited or small access to other tangible assets in their balance sheet because they're a young business, or maybe just in a sector where there's not a lot of other assets that they can pledge, but they can generate sales. And if you're generating sales to verifiable or validatable buyers, good quality debtors, if you like, then the risk for an invoice discounter is what's called a one-to-many risk as opposed to a one-to-one risk. So whilst I'm lending money to, let's say Declan mentioned, I'm lending money to Declan, but I'm looking at the quality of the people he's selling on to and the mix and spread of his book. So whilst I have absolutely no concern about Declan's security or efficacy, I mean, in some businesses, I'm looking beyond just the owner of the business, and that for a lender, be it a bank lender or a complementary lender, is where the risk lies. So therefore, your access to capital is greater because the mix and spread of risk is better and softer.
Great. Rona, I have one last question through for you. There's been mention about considering the blended cost when you have multiple facilities. Can you just explain what that is?
Yes, so I suppose whenever I was chatting earlier on about often whenever somebody goes to their bank looking for funding, the bank might be able to fund 70% of the ask. That's where we will then slot in with that other 30%. With our position as typically sitting behind the bank, our pricing is higher than the bank's. So I suppose it's that combination of taking the bank's pricing and ours together where that overall blended cost of delivering that particular growth or project for that customer should work. So it's taking that full blended funding into account to work out that overall cost to the business.
Wonderful. Thank you so much. That's all of our questions covered off, and we're just on time. So I'm going to stop sharing my slides. Again, a huge thank you from me personally for all the speakers today. I hugely appreciate your time and your expertise. And just before I hand over to Angelene for closing remarks, if I can just highlight a bit of additional support, and it's our newly launched business, Making Business Finance Work For You guide. It's hot off the press only in the last couple of days, and you can access by clicking on the resources button on the bottom of your screen. So it's a really helpful guide that delves into 7 of the most common challenges that a business might be facing and just explains the types of finance solutions that can help. So again, huge thanks from me, and Angelene, if I can pass across to yourself.
That's great. Thank you, Susan. So it's been an absolute pleasure to spend some time with you all this afternoon, talking about how we can further explore working capital in Northern Ireland. And it's so encouraging because, here at the bank, we started Business Finance Week for the very purpose of bringing together partners across the wider ecosystem to really help businesses understand how they can stay ahead of the competition, how they can use finance to stabilise, to prosper and grow. And it's been so insightful hearing from all of our panellists, I'm sure you'll agree. And, just some of the key takeouts that I noted down, first one, it comes out loud and clear, there is support available in Northern Ireland, and that's so encouraging. Start your conversations early, I think was the second point I make. Don't wait until you're in that pressurized situation. Start your conversation early. Be prepared to share your strategy, your plans, your business growth, and really your vision for the future of your business with your potential funders and partners. And then finally, I think another one that came across loud and clear was do your research. So investigate, research before you then make that final decision around the finance that's right for you. So we really wanted the purpose of today to be that businesses left this session having a better understanding of, one, what is the support available in Northern Ireland, but also just a better view around how you take that next best step that's right for you, right for your business stage, and right for your growth journey. And we really hope that we've delivered that for you today. As Susan said, I wanted to say a huge thank you to all of our panellists today, particularly to FSB Northern Ireland and Roger Pollen, who have been our event partner, to Paul Millar, Judith Totten, Liz McCrory from UK Export Finance, Gary Coburn, Rona Barber, and also, of course, to Declan. Thank you so much for sharing your journey, actually, since you joined and around the journey you've been on with Brookfund. It's been hugely valuable and insightful to hear from all of you. So we are midway through Business Finance Week. So if anybody would like to sign up to any of our other events that we've still got going on, we'd really love to have you. And if by any chance you wanted to see any of this information again, we will be sharing the recordings of the webinars on our website. So feel free to access that information again. So thank you so much for joining us today. It's been an absolute pleasure hearing from you for the last 90 minutes, and we look forward to seeing you again soon. Thank you.